quote, Jerome Powell said, the U.S. housing market remains weak. Lisa, what's your reaction to that? Do you consider the U.S. housing market weak?
Nope. Well, regionally, no, right? I think that there are certain areas where maybe that is the case. And I guess it depends on what you define as weak. Is it weak in that the demand is low? No. But is it weak in the number of listings that we have to keep up with what we need? Yeah. That there is a weakness that exists, but I don't necessarily think it was the weakness he was referring to.
Yeah, NAR just added 580,000 sales to their seasonally adjusted number. What they're, from 4 million in January up to 4.58 million in February, in the same week that Powell calls the housing market weak or remaining weak. Tom, what was your take on that quote?
Well, Lisa hit the nail on the head. What do you mean by weak? I mean, it was, it's sometimes these people come out with quotes and they're really vague. That's how people in Washington know how to talk. They're very non-committal. They're flopping around like a dead fish on the side of a boat. The housing market is weak in one factor. People who want to buy can't go buy a house right now. That's a weakness. I mean, because of the inventory challenges that we're seeing. And I do see, and my hope is at the beginning of the week on Housing Wire's housing market tracker, we saw a blip up in inventory by 1,700 units, a little more than that compared to the previous week, where we were seeing previously 6,000 unit declines in available inventory. So if that continues, and that would be the best news for anyone that serves the real estate industry, is just getting a little more inventory, because demand's still going to be strong. Single family residences, people want them. It's that issue of people who want to go out and buy a home. They've gotten pre-approved. They got the money set aside, and they would probably sell their home if they found something, which this is where the logjam is. So it is weak in the ability of buyers to go out and find a home and buy it if they wanted to, because of the challenges there. It's not weak in terms of demand. Affordability is historically in a good spot with rates in the sixes. The weakness is the ability for people to transact when they want to.
And transacted at an affordable price point.
Sure.
Like, so the new home data that just came out, new homes, new construction's up almost 40% to 440,000 median price point. The median price point, according to NAR this week, came out at 363,000. So that's an 80,000 spread between new home sales. KB Homes earning report, they were at 495,000 for their companies, new construction median home prices. So there's 8 months of supply in new home sales, but they're all well above median price points. So even when we look at the current inventory, you could have, something that's a tear down on the market, and then something that's well above median price point. And the middle, like mostly everything in America today, the middle is absolutely dead. And that's where most home shoppers exist today.
That's the brutal part. And looking at what skew that's creating in average prices and some of the perception is becoming tough. I was running some numbers before, just looking at very small pockets within Massachusetts, and a lot of it is created by some new construction sitting on the home at average prices that are sitting at about $1.4 million is the average price for new construction sitting on the market in Massachusetts today. If you take that out of the equation, the average price of what exists is hovering around 500,000. But when you put that in, it drives up the average price a good chunk. It's bananas.
Has the new construction slowed in Boston, Lisa? Because I know you follow Boston closely. The last couple of years, it seems like there's just cranes everywhere, whether it's South Boston or really all over the city. Has that slowed down?
No, it hasn't really. And that's the ironic part, is that there was some fallout when rates jumped up a little bit in the fall, or when the rates jumped up a lot in the fall. There was some fallout with some of the newer developments that had sold out, but where they didn't allow financing contingencies, and the affordability changed dramatically for some folks who had been on the cusp. But we've found that almost all of those units have actually been resold. And so the new construction, it's not so much South Boston. The Seaport area is just like skyscraper after skyscraper coming up, and both a mix of office space and residential space, which I find fascinating.
Oh, Powell was asked about office space, and it was interesting. They're like, hey, is that the next banking crisis? These banks that deal with, a lot of commercial loans where they've got commercial investors, SVB was a lot of tech, VCs and tech investors that were holding their funds at SVB. And so they're like asking about regional banks that deal with mostly commercial lending, specifically offices. And he had a very short answer. He's like, these banks are, diversified and they're very liquid. I don't, he wanted to continue to instill confidence in the banking sector. I was listening to a guy from one of these funds, Barry, his name's escaping me. I'll find it here in a second. Anyways, he said new office buildings, so that like the new construction office buildings in Boston, for example, are very strong and tend to be, leased out. And then these older office buildings are the ones that are very vulnerable.
Yes, I agree with that 100%. Even in the suburbs of Massachusetts,
Yeah.
we're finding the same thing.
We had, our office here. Lisa, you've been here. I mean, every tenant has moved out except us and the owner. That's just the building's no longer fully occupied. And I mean, it's a anecdotal instance, but you've been. It's not like an old building that we're in. So
that was Barry Sternlight from Starwood Capital Group, just for reference there. Who I was trying to remember. Tom.
You could have just left him as Barry, and I think that would have been good.
Well, it could have been
Barry Bonds.
It could have been that guy Barry Habib, the mortgage guy. There isn't that the mortgage guy?
It is the mortgage guy. He has an interesting prediction about rates. We can certainly unpack that. I'd have to look it up here. Office space. I mean, when we saw the SVB and Signature Bank failures, Byron has opted out of this group text, Lisa, but you were on there, and we had some good inside intel that. Commercial was one of the more risky areas. Single-family residence is really strong, but that's what a couple very high-up people said at large companies, big banks. But we're not going to go into where they are. So that is a very real fear. And when you think about, look, when there's recessions, people are looking to cut costs. I mean, we've all had this conversation offline here about our respective businesses as well. And with how many people work remote right now in this hybrid model that's kind of stuck around, probably a little more than most people thought. There's people opting out of their leases and downsizing space. I mean, my financial advisor, he's at a big bank and they downsized the space dramatically. And they used to have the really sexy office space right downtown.